Good morning, everyone. Can you hear me okay? Thanks for being with me on a Friday. Just to let you know, we're not bearish on the ES, just to let you know. NASDAQ's a little extended. And also, when you're seeing this disparity between the transports on the upper left and you're seeing the Russell on the upper left and the bonds on the upper left, usually what happens is you see a snapback of the ones that are underperforming, but that's really hard to just like close your eyes and do that. So just to let you know, so at the moment, I'm watching this. So you definitely see that things that have a reversal candle like that keep going. So that was a good trade in the other simpler room, no doubt about it. I like those kind of reversal candles. It's hard to stay in them overnight, but yeah, you see they worked. So that's one thing. And like I said, this is more, end of the week sort of market outlook. So I'll try to show you the market outlook and I'll try to show you some tricks for today that I'm watching. But this is the first thing I'm watching. I'm watching that the ES, and I know I've been a broken record about that 20 moving average, and it stayed over it. So that's that purple line. The NASDAQ way over it. Then you got the Russell and the bonds way under it. So the one thing going for the bond market is it's oversold at support. So just keep that in mind. The Russell oversold at support, but it hasn't turned yet. Dow, yeah, it's right at it. And the transports refuse to go to it. So that's a big disparity. As you see, this Russell will not rally. It's amazing. It will not rally. So, what's that mean to me? Well, that has a lot to do with the bond market, I guess. But when I see this kind of disparity, I look for what's the most extended and then look for a reversal pattern if I want to play something to the downside. Now, I'm not saying to play the ES to the downside at all. And let me show you why. If I put this side by side, I'll even put it on a weekly. There's the weekly of the S&P. So that had that rollover gap, which means there's a premium when it rolls to the farther out month. So I like using the SPX. So you see the SPX is knocking at the highs, close to it. But then on the right, you got the NDX, which is way above it. So that makes it more likely that this is probably going to follow. So, probably going to follow, which is what it's doing right now. Finally. So, that's the problem right here. A ton of people want to short the NASDAQ. So, I don't know about that. So, like I said, those reversal candles, a doji and then a follow through to the upside. Reversal candle, follow through to the upside. Usually, when I see this, you need to see an equal and opposite reaction. So, as you see these dojis that work fine, what do I mean by equal and opposite? You need to see that kind of wick the opposite way. The opposite way. So, it's extremely difficult. I'm not going near this on the downside. I would go near this right now. Very interesting. Fund managers are the most long the NASDAQ 100 futures since 2016. Let me get that up for you so you know what I'm talking about. If I can find it. I'm typing it. No proprietary. I'm just looking it up on Google because I had it. There you go. This does not mean to short it. Just a second. This does not mean to short it at all. It means that if I want, maybe I can look for reversal candlesticks. Oh, don't have it. Don't have reversal candlesticks yet. So just keep that in mind. I am watching that, but you're not seeing reversal candlesticks yet. So what I mean by that is this. I want to see this, and I'm going to show you the NASDAQ upside down. So here is, and like I said, there you go. I'm telling you, this was going nuts this morning, went straight down. The same with the XBI. So this is how I look at it. Here's the NDX. NDX with that nice reversal candle, like I just said. Now you're looking for it upside down. So I'm going to take off the drawings. And I'm telling you, I would not get that bullish on the NASDAQ. Like I said, if I'm going to play something to the downside, I'm going to look for a reversal pattern, even if it's ultra intraday, and then look for a bear flag. That's how I want to try to play the NASDAQ. But what I wanted to show you was this. If you see this right here, and I'm going to put it on a daily chart. We can put it on a 4-hour. You see that right there, that wick. I want to see, I'm going to make this upside down. There, that's what I want to see. I want to see a reversal wick. That's the NASDAQ upside down. So you don't see that yet. Do I think the NASDAQ's extended? Yeah, I think it's extended, especially relative to a lot of other indexes. But it hasn't rolled over yet. Usually when this happens, what I do is I look for what's not going up and maybe already formed a bear flag. So a lot of times I have a ton of charts up here and I look to see if anything has formed any kind of bear flag. You don't see it yet, but I'm telling you, when you see this, when you see the Russell almost on its low, these are more likely to form bear flags. That's the way I'm looking at this. So it's not there yet, but that's what I'm watching, just to let you know. And like I said, it's not there yet. Usually what happened, like I said, with this down that much, this to me is the way to go today. So longer term, what do I think? Well, longer term, you see these. You don't want to go near these on the downside. You're looking for what's already reversed and consolidated. Usually what happens is they reverse on, let's say, a 5-minute chart, and then they work off their oversold. And if you're bearish, by forming a bear flag. So we're not seeing that yet. Of course, it's going to happen when I'm not on. But that's what I'm looking for. When I see the Russell down this much, I have to respect that the NASDAQ is overdone. Now, I'm not shorting the ES. I'm not buying the ES. I want to play the NASDAQ. And the reason I'm playing the NASDAQ is it's too extended. Then it comes down to, well, which NASDAQ stocks? I have up a lot of NASDAQ stocks, whether it's the Amazons, the Metas. You see, they're all starting to go down. That's hindsight. I'm talking about later. So I don't want to see this. I want to see an oversold rally by forming a bear flag. So that's what I'm going to be looking for today. Like PANW, even though this is a monster stock. That's what you're looking for in indexes. So just to let you know, that's what you're looking for in indexes. Not that. You want to see things work off their oversold by flatlining. So we don't have that yet. I'm just telling you that's what I'm going to be looking at. Yeah, look what's happening. That rallied. The things that didn't have bear flags are going up. So we're looking for what refuses to go up after the oversold rally. That's all we're looking for. And like I said, I'm not like perma bear whatsoever. You see those reversal patterns? Great. Yeah, that's bullish. But now you're looking for this. Exactly what you're seeing. That. That's what you're looking for. A wick to the downside. Now, when I'm day trading, the first thing I'm doing is I'm looking at an hourly, a 15-minute, and a 5. Hourly doing nothing really, not much. 15-minute, still overbought. So I'm not buying the NASDAQ. How about a 5-minute? 5-minute, I'm telling you, I wouldn't be surprised to see it do that. The biggest problem with the NASDAQ, even if it has a little sell-off, number one, that's only 20 points, and number two, it gets you to there. But with the Russell down this much and trying to form a bear flag, then I have to think the NASDAQ is going to go back to this coagulation area. So that's what I'm looking for, just to let you know. That's what I'm looking for. It isn't there yet, but that's what I'm looking for. So just keep that in mind. So just keep that in mind. So definitely NASDAQ, everybody is long it. Now, I just mentioned the Bloomberg article. And another way to look, but it doesn't work perfect, I'll just tell you right now, is you go into the futures on FinViz. I haven't even logged in. Go put the NASDAQ. So what happens? The large traders are really long. On the other hand, they've been long for a while. That's why I think you have to have 3 reasons to do something. So just keep that in mind. How about on a weekly? Yeah, it's showing up, but it was there before. You got to combine other factors, and I think that reversal candlestick is going to be the way to do it. So for today, definitely looking at something in QQQ under the market if I see a bear flag. And you see, I think what I'm looking at is I'm looking at that. Now, it's going to be oversold temporarily. If I'm ultra short-term day trading, I'm going to use a 15-minute and a 5-minute. If I'm doing something for next week, I'm going to be doing probably a 4-hour and a 1-hour. When I see that kind of pattern, I'm more confident about maybe doing something on the downside. But the way markets are moving, if you see Meta or Google or Apple have this kind of reversal candle, but the opposite way, what's this tell you? Yeah, everybody gave up here, and then it went up another 20. You want to see that the opposite way, those wicks. The problem is if it goes to here today, everybody's going to think they missed any kind of sell-off. I like wicks at resistance or wicks the other way at support. When this is at Never Never Land, it's extremely tough. Now, I see what you're talking about a fifth wave, but really, David Starr or Big Bad Voodoo Daddy is the person to ask about that. I definitely see this kind of count, but that's for him to mention. He's the expert with that. So at the moment, I'm not doing a lot. I'm looking for consolidation patterns. That's all I'm doing. Now, reversal candles, I just showed you the QQQ. Now, I showed you that reversal pattern here while I showed the NASDAQ. And I showed that reversal pattern here. Right there. As you see, a reverse from support. If I'm going to play something on the downside, I want to see it reverse from resistance, like the transports. There's going to be more than enough time to screw around with all these. I just want to make that clear. And so right now, when I'm watching the NASDAQ try to come back, like it is, from an oversold 5-minute, like I said, that's what I'll use day trading, a 15-minute and a 5-minute. Now I look for what refuses to go higher. That's all I'm doing, looking for what refuses to go higher. And I still don't know on a Friday if I want to mess around on the downside whatsoever. So that's where I am right now. Of what I see with the Russell forming that bear flag, I'm much more apt to play something to the downside. You see what the NASDAQ's trying to form. So if the NASDAQ on an hourly keeps that wick going, darn right it could go back and test that support. Then it's how it works off that oversold MACD. Maybe that's a top. So that's what I'm watching. I just want to let you know what I'm watching. So definitely watching that Russell, watching that transports. That's hourly. Russell acting bad. Yeah. Now, why is it acting bad? Probably because the bond market has refused to rally much. Even the XBI refuses to rally because the bond market's not rallying. Very interest rate sensitive. That's the way I look at it. But if I'm going to play later in the day, I'm going to look for this after it works off an oversold MACD. So if you're wondering what I look at with this, the MACD that I use is a 31016 on the bottom right. Simple. It can be exponential. So all this means is it's the 3 moving average subtracted from the 10 moving average. And then this is a 16 period moving average of that red line. So if this red line is here, now I'm not saying to use the blue line on a 5-minute. I don't. I use it more if I do on a daily. But if you did, because a lot of people try to mess around with that, all you do is you take 16 periods earlier and you realize that you're adding this and you're subtracting 16 periods on a 5-minute. So that blue line is going to hook down. So when you get a quick sell off, you get the 3 moving average moving down faster than the 10. And that's how you get the red line to move down. So that's how that works. If you want to see it, well, that's how it works. So if you see a fast move, the shorter term moving average is going to react faster than the 10. And that's how you get that to go down. So now if this gets back up to here, well, now the 3 is going to do that and the 10 is going to do that. It'll widen the other way and this will go back to 0. So that's the way I try to look at those things. Now, longer term, I think the NASDAQ is getting near a blow off top. But boy, you don't have enough reasons yet. You just don't have enough reasons. I need to see that? I want to see a red take back a green, not a green take back a red. I'm really into big candles. So at least this red took back some of a green. This red took back a green. You don't see that yet. And the problem is if this goes down 100, everybody's going to give up and say they missed it. So just keep that in mind. And all I can tell you is when the NASDAQ is doing this, and we're watching the Russell doing this, and the biotech's going down. Also, usually what I do is I'll look for the individual indexes that might refuse to go higher. I mean, that's what I'm trying to do. Look for the individual ones that refuse to go higher. And that definitely does, it doesn't mean you have to mess around right now. You got this end of day stuff. If you see a definable pattern, we mess around with it. So just keep that in mind. Disney, why would I even look at Disney? Now, I'm not dissing you, Mike, whatsoever. The only reason I'd look at Disney is there's so many of those travel related things having another leg up, whether it's RCL, whether it's Marriott. So that makes it more likely. Well, not this second, but it makes it more likely that I would look for a long idea. I just don't like Disney. I just think that cable, all that stuff, doesn't do it for me. But if I was going to play it, you have to have other travel related stocks going up. I mean, that's the way I look at it. You're looking at those triangles probably. I know we look at a lot of the same things. And you see, the NASDAQ sold off. I know I have a lot of charts up. I figure if I have enough charts up, one of them will be right. So you see the NASDAQ going up. No doubt about it. From that oversold 5-minute chart. So it's going up. So like I said, when I'm day trading, I'll use a 15-minute, which is doing nothing, and I'll do a 5-minute. When I see this rally on the 5-minute, I'll look for what refuses to go up, if I even think of playing something on the downside. And like I said, I might miss the beginning of something. I just want to get it on the way down or the way up, looking for consolidation patterns. I'm really into consolidation patterns. And I'll look at consolidation patterns on the upside, the downside. I'll look all kinds of ways. I just want to make it clear that I don't see the consolidation pattern on the downside yet. And also, like I said, the ES could go to where the NASDAQ is. So this could definitely go to like 4,900, and that'll probably pull up the NASDAQ. So I'm looking for long ideas also. The problem is the areas of underperformance are continuing to underperform. That's always a tough thing. Now, I do a thing for our subscribers on Chart Patterns Mastery. I do box charts, usually Tuesday, Thursday, and Sunday. I just did them at the last minute today. I had surgery, so I'm a little delayed, but I was showing some of biotechs that still have a halfway decent chart. So let me show you. All I'm doing here, and it's not like voodoo science or anything. I'm just taking a screener. So I'm taking an industry, and it doesn't have to be biotech. It's just there's a lot of takeover activity in them, and they've lagged. In this type of market, a lot of times those start leading, even if it's early. That's why you got to wait for those reversals like you saw Meta, or you see consolidations. So let's just take over 7. So there's only 67 biotech stocks that are over 7 and have traded 200,000 shares. So we can make it 100,000. It's 119. But the key is right here. This is all I have. Over 7 biotech. It's traded at least 100,000 shares. The key is, though, you want the ones in an uptrend. So then I'll just go to price above 50. It's all of 87. And then you can eyeball them. What do I mean by eyeballing? What I mean by eyeballing is while you've had the XBI going straight down, like you see on the left, you can put it even on a daily. Yeah, going straight down, going to fill that gap. So when I see that, then I'm going to look for what doesn't have this slope. What has more of a bullish slope? Now, keep in mind that still could have a leg down. So I'm not sure of this yet. I'd much rather see it back up where it was earlier today for me to be more excited about doing a swing trade in an individual one. But I'll show you at least what I'm looking at. So here are your biotechs. I'm just going to sort them from highest to lowest. You're looking for what has retained a bullish structure. So you don't want to see it going straight down. You want to see it almost flatlining. So let's see if there are any. Well, I know there are because I already screwed up one of I didn't buy it. And this is the danger with these. Darn right it'll look like a bull flag. And right here, I wanted to buy the 21 calls. They were bid 30, offer $1. That's a little rough. But this retained its bullish structure. I found that from that scan. And when you put them in here, you see Regeneron is still retaining something. $900 stock's a little scary. When it does this, that means it was taken over. Lots of takeovers. SRPT still retaining a bullish structure. What's the difference between Vertex that had a bull flag and SRPT? This had a bull flag at support with no resistance. This has a bull flag with massive resistance. So you're trying to be picky in here. You're trying to find things that have no resistance. There's NVRO's one. And that doesn't mean I'm buying them now. I'm just saying that I'm looking for things that have retained their bullish structure. All I'm doing is I'm taking this. I'm taking price above the 50 because I want something in an uptrend. Biotech over 7, over 100,000. I can't tell you how many times I've taken this out and stocks just crater. You want them already in an uptrend. The other thing with biotech, you want to do them as option spreads because they can have disappointing news and stuff. It's scary. So maybe Biohaven. Like I said, though, if you see that XBI have another leg down, that's less likely to break up. So that's all I'm doing. I'm taking 4 factors, even ARVN. If you see the XBI stabilize or invalidate that 5-minute bear flag, darn right I'm going to look at some of these. There, MRUS. Yeah, that held. So you want the ones that have retained a bullish structure. Ideally, you get that reversal candle like you did with Meta. And that's what I'll do. I'll scroll down these. Now, a lot of time, there you go. Sage, but I don't like gap downs on biotechs. That usually means some kind of bad news came out. Sava, yeah, that's trying to form a bull flag. Now, don't get me wrong. I might not trade any of these. I might just trade the metas of the world. But this is just a nice, handy scan for possible swing trades. There's one that retained its bullish structure and went nuts. All you're doing is trying to find the ones that have less of a steep slope after the broad index went down. So that's all I'm trying to do. Just want to show you that. So next thing I wanted to show you, I think it's another trader trick. Open interest. So just keep in mind, open interest on the SPX the day before AM expiration is notoriously unreliable. So yesterday, the AMs had massive open interest for this morning. They expired this morning. They actually expired last night. So the SPX hardly ever goes to that, and sure enough, it didn't yesterday. But for today, I look at this. This is the third Friday of the month. Is there a lot of open interest on some of the stocks I watch? You're going to see the one that had the best was Apple. So what happened in Apple? It started going down. We were talking about it going to 190. Well, now it's 190. Look at the open interest. Huge. Evenly dispersed. What I mean by that is at least it's a lot on both sides. That's more likely than to be spread traders. When you go into the Amazons of the world, you're not going to see it. Nah, 37 and 15 isn't bad. Not bad. You still want to combine it with chart patterns. But that's the kind of stuff I look for. So how about Tesla? Yeah, don't laugh. 200. I know that's hard to believe, but there's a big pull. 210 has a lot. 200 has a lot. So even 215 has a lot. So probably when I play this, if it was 212 and a half and it had some kind of bearish pattern, I'd play it at the minimum to 210. Just want to let you know that. Minimum to 210, that's about it. But right now, nothing looks bad. Like I said, I want to see, and it might take next week, a reversal candle followed by a bear flag, just like you saw the NASDAQ do the opposite. So that's what I'm trying to do. See, in Tesla, in hindsight, there was no real bear flag, even on a 1 minute. That was tough. So Netflix, one of our loyal subscribers, grabbed onto some puts on the opening. I didn't get them. Good one. So I wanted to see some kind of topping pattern first. Instead, it went down without me. So definitely looking for those type of patterns. See the doji and the follow through? That's a doji, indecision candle, where the open and the close are about the same. It's a long like a doji. Big range. High, low, but it closed near where it opened. So just keep that in mind. In fact, we have another loyal subscriber on Chart Patterns Mastery that sits there and plays it versus the high. That's tough because that's 4 points. But up here, you can look for a reversal pattern. So here you go. Now, this is a perfect example. I wish I could copy and paste this on the restream, on the YouTube Live. That's impossible. I'm not going to be doing that. That's hindsight. That's impossible. But, and this is a big but, there you go. You had your reversal and the consolidation. The bear flag, the bear flag. So you missed that, but you made that. And before you get frustrated, that's 5 points. Just keep in mind that was 10. Very exciting. So you look for those. So you have another one now. Look at this. That's a little gutsy when the NASDAQ's up 150, but there's a bear flag staring you right in the eye. The only difference between this one here and this is this has multiple layers of support, all those prior lows. This had nothing. So that's how I try to trade, and that's what we try to point out. So right now, this is what I'm watching for today. I'm watching the bond market refuse to rally. And I'm watching the Russell refuse to rally. I can't chase the NASDAQ even though it looks great. Like we talked about, 5-minute chart oversold, you don't touch it. It's just not there at the moment. If I'm going to play anything, I'm going to try to find something that has a short-term bear flag if I have that theory that the markets are going down. Now, I will tell you that if I see these bonds out of nowhere down 16 and Apple's up here at like 190 and a half, I'm going to play Apple to 190. I'm not touching Amazon. Like I said, the open interest is above the market. So Netflix trying to form a bear flag, but it's at support. How about Microsoft? Everybody plays Microsoft. Let's go and look. Look at that. Not evenly dispersed. 1,000 open interest, 13,000. So when I was on the floor, you had a big in the IBM pit, you had big open interest. That's because a lot of market makers had spreads on. When you don't see it evenly dispersed, it's less likely to be spread traders that are going to have to unwind. This open interest updates Thursday night at midnight or Friday at 12:01. So that's not a good harbinger. Now, I know on this in this, the first thing I'm doing is I look for the open interest, and I'm telling you right now, I know that on the it's free in the for the YouTube live. But if you want to find how I do it, I just take big open interest for today and look to see if it's evenly dispersed. That's all I'm doing. Looking for it evenly dispersed. So if I see my main list, and this is just 3 things. I'm taking today's expiration. I'm taking relatively cheap options because they should be near the strike price. And when you do that, there's like 300, there's a lot, 183. And then all you do is you sort it by symbol and you look to see if it has a lot on both sides. That's all I do. So not a real proprietary kind of indicator, that's for sure. And here's a perfect one. AFRM. I hardly even look at that stock. But look what happened at 40.53. Right here. Now go look at the open interest. There you go. It sticks out like a sore thumb. Look at that. It doesn't mean to buy it now because it's acting bad relative to the NASDAQ. We're talking about earlier. So pretty cool. Now, could you have hit it right here? Could you have tagged it? Well, you really, a lot of times it's hindsight. Let's see if there was a 1-minute chart that was identifiable. Let's just see. The problem with that, yeah, there you go. The problem is by the time it broke, it's almost 40. You would have liked to see that 40-80 and have that. So the risk, you have a lot of like good stuff in there, which you don't have at the moment. Like I said, I am not bullish on the NASDAQ. Not when the Russell's down like this. Just to let you know. Just not bullish on the NASDAQ for next week. Unless these start cooperating on the upside. If I see the ES not hold this right there, then to me, the NASDAQ's going to come back to earth and go at least back to this level, which is about 200 points. Just keep that in the back of your mind. That's what I'm going to be watching. While it's futzing around and while I'm on in that area, I would look for what's forming a bear flag. So you could do that with a 5-minute squeeze. So funny you mentioned COP. I still like the idea of crude oil if I see this break up. So I'll show you an example. I know that's a daily, and this is probably going to be an hourly. There. When this forms a bull flag above the breakout. That way my capital is timed better. Even that's a bull flag. So I'm having a tough time with the COPs of the world when I don't have that kind of pattern. Now, I know it's right at that support, and I know we were long it on the last breakup. The key is the breakup, the overbought sell-off to support. If you want to play it, this is probably where you start taking a stab, and this is also where you probably start looking for some that. Now, I know this is aggravating to hear it from me. Probably a lot's aggravated to hear from me. But it's a better buy over that. So you know that's, at least that's held. You could buy it here versus the low, but I always worry about gap risk overnight. But I definitely see that support on the left, and I see that rectangle on the right. No doubt. Remind me about that on, on Monday. Also, like I said, I'm not going near these yet. I don't see a reason to go near them. Nothing for him to bear flag. So I'm talking about an extended index next week, not today. And in our chart patterns mastery, I know a lot of us look at Lamb Research to do a strike price, like a round number. You can't do it if you don't have evenly dispersed open interest. You just don't have it. That's why I didn't touch it. So you could take relatively thin. This only trades 500,000. And sometimes you get some funky open interest. Does Chipotle have it? No. No open interest on the put side. So I can't do that either. How about some other wild ones? How about Booking? I'm telling you, we did really well in Booking years ago because out of nowhere, it had 900 on both sides of the market. Now, it was $1,000 stock then, but it worked. Right now, nothing. No evenly dispersed. Broadcom, no evenly dispersed. That's why we didn't touch it as a strike price play. NVIDIA. Well, NVIDIA just looks good on a chart, which is helping the whole NASDAQ. There's your bull flag. There's your breakout. So, helping the NASDAQ, no doubt. What I'm doing is looking at that scan I showed you. All I'm doing right now is I'm going through that scan to see if I can show you a really good for instance. And I haven't been able to find any halfway decent. Halfway decent, haven't found them. Now, sometimes you have a tremendous amount of them. You don't now. So as you see, market's just drifting. Really great when I'm on for that. Now, just to let you know, I'm in the options room, which is now, renamed. And I just don't see it right now. If I see bear flags later, sure, I'll go and play something to the downside. Now, you might say, why don't you play the SPX? Play the SPX to 4,800. Not bad. The problem is at this time of day, with 3 hours and 42 minutes left, I've seen where you're too right. That's always aggravating. Too right. So I'm not doing it. Now, just to let you know, in the essentials room and also in the YouTube room, if you're nervous about playing the SPX, you can always do that 10th. Sometimes we do that with house money. We'll go and risk like $10. What do I mean by that? We'll go and do this. With a 3 hours left, you got to do a 10-point wide in the SPX or a 1-point wide in the XSP, which is a 10th. It's a 10th. See that? Well, guess what? A 10th is 25 cents. You can risk 25. You only make $1, but that's one way. I'm not doing it, but I do think it could go to 4,800. No doubt about it. Now, just to let you know, with order entry, and the reason I exited what I was doing is we had in one order in Netflix to buy something at $1.50 that's now $7. Yeah, I missed it. So this, don't see enough reasons to play it to the strike price yet. I'm watching all of these act fine. AMD, Apple. I don't see the reason to mess around on the downside other than if it's something as a hedge in some way. And like I said, SPX, it's a little early. If you're going to do an experiment around there, I would do the one a 10th. Because the problem is that nothing is turned down yet. So I'd much rather do an SPX. Well, you could do that. It's got a lot of open interest there. But the problem is, it's just when it's this early and the stock is just trying to break up, I have a tough time. Do I think it's going there? Yeah. But from where? It might go to 48.10 first. That's always the problem. But you could definitely go and do this. I wouldn't do a 5-point wide. A 5-point wide is too narrow. You might be too right. And this could go to 48.10 first because it doesn't show any reversal pattern. That's always the danger of doing it with this much time left. And nothing looks bad yet. Now, regarding nothing looking bad, if you think you could just buy any stock you want, you're going to make money today, look at the advanced declines on the upper left. And not that easy to make money. That's a joke. That's a joke. Which means you can't just blindly buy something and then short the indexes. It's just there's too much internal crap. So really tough call for everyone. That's where I am at the moment. Now, I will tell you something now. We're long something we're losing money in, but there's a certain time where I get hopeful. And I'm hopeful when I see a bull flag and the thing we're long. So if it gets over this, you're talking about it going back to here. Non-24 hour, if it gets over this, you're talking about it getting back up to this zone. So that's what I'm going to be watching. It's not there yet, but at least it's stabilizing. While that's stabilizing, I'm not going near anything else other than if I do something as a hedge. And that's why I can't do an SPX, because I don't have enough reasons. If this is up that much when the bonds were down 8, if the bonds rally, then why should that go down? So I'm trying to have 3 reasons for you, and you just don't have them. All I'm doing right now is scanning. At the moment, nothing looks bad. So XBI we're in, and we're in TLT. So too early in both. Don't get me wrong. Too early in both. So the old if then. If the bonds are up 15, is the ES going to be down? I don't think so. Like I said, the SPX needs to go sort of where the NASDAQ is. So I'm not playing anything on the downside at the moment. We have a spread in something against long positions. That's all we have at the moment. And I totally see what you're talking about with the bonds at support. I like going more on price support, number one. But the other thing is I want to see the reversal candle. I'm not sure that's decisive enough a reversal candle. It's getting there. And that's where it gets aggravating, because it's probably a better buy up here than it is down here, because the verdict's still not known. But definitely when it gets to a moving average or price support, you look for those reversal patterns, which you're slowly getting. And if that breaks up, then you're probably going to see the whole market close near its high. So that's where I am at the moment. So that's where I am at the moment. Not looking for a reversal pattern if the markets are acting this well. I'll look for buy ideas. So I don't see a reason to do anything on the downside unless some factors change. If I saw the bonds down 18, that's different. But you don't. So that's not the way to go. So everybody take care. Like I said, thanks for being with me. Wait for reversal patterns. You don't have them. Just keep that in mind. You don't have reversal patterns. Right now, I'm looking for stocks like SRPT and Jazz on the bottom, and I'm looking for actually reversal patterns on the upside. So take care, and thanks for being with me.